Uh, Good afternoon to everybody, and a very warm welcome to each and every one of you on this rather warm Tuesday afternoon in Johannesburg. Hoping everybody is keeping warm and looking good in the middle of winter. And a very big and warm welcome as we get into the launch of the SA Startup Act Movement Progress Report for the 2023-2024 year. My name is Sanjay Soni, and I am an executive lead at Josie Angels. We are an angel investment group and have been around for 8 years. And it's my privilege to host you this afternoon. We've got an esteemed, high-profile list of panelists that are going to share some of their thoughts around their own views around what's happening in the startup space, progress in their respective jurisdictions. So we're in for a bumper 50 to 60 minutes talking about our current year's actual report. For everybody's benefit, this session is being recorded and the recording will be made available. Just a very quick point to note, at the end of this session, we will have a QR code put up on the screen. You scan the QR code and you would be able to download the 23-24 progress report. So that's just by way of some of the formalities. Before we get going into the panel, let me just share with you a brief overview in terms of some of the people and various participants. Just some brief background in terms of I guess, Simodisa. Simodisa is the Secretariat of the SA Startup Act movement, which is now celebrating 10 years in the South African entrepreneurial landscape. So over the past decade, Simodisa has been at the forefront of driving innovation, supporting countless startups and fostering a vibrant community with a bold vision to catalyze and amplify entrepreneurship on the southern tip of Africa and to create a burgeoning startup ecosystem. As we celebrate this significant milestone, we are going to reflect on the journey, some of the key milestones achieved, and the exciting road ahead. Let me just perhaps briefly talk to you about the SA Startup Act movement. Some of the panelists on this call are members of the SA Startup Act movement, which has been around for a couple of years. And I guess the aim of this movement is to create a more business-friendly environment to support the growth as well as the scaling of the startup ecosystem in South Africa. Our primary goal is to influence policy reform and policy change to create a more conducive ecosystem for entrepreneurs. Our primary objective is to advocate for policy reform and for policy change that will enable the easier establishment, growth, and scaling of startups. I'm going to touch briefly on the report and in terms of the progress and sort of talk about 6 broad areas. So when you see the report, it's going to, in essence, focus on 6 broad areas: the legislative framework, access to funding, some of the support structures, innovation and technology, global competitiveness, and policy advocacy. And so in our view, the progress report serves as a roadmap for the various key stakeholders that are involved in the startup ecosystem, providing detailed insights into the potential impact of a Startup Act in South Africa and the startup ecosystem, as well as the broader economy. So just to briefly take you through what's going to happen over the next 55 or so minutes, we've got some esteemed panelists that are going to join me, and the format today is largely premised on 2 aspects. There's a bit of a Q&A where the panelists are going to share some of their unique and personal insights based on their extensive experience in operating in the startup ecosystem. So we're going to go through a couple of questions and I guess some general discussion, and let's see where that takes us over the next 45 to 50 minutes. Peter de Villiers, I'm going to start off with yourself. I'm going to ask you to briefly introduce yourself. And as you're introducing yourself, perhaps tell us what inspired the creation of, I guess, Simudisa 10 years ago.
Thank you, Sanjay, and thank you to fellow panelists for including me on this conversation, and all the entrepreneurs that's on the call. I feel like we are in good company. So, Sanjay, I think, first of all, Simudisa means to lead or to shepherd. Many people don't know that. And I can't imagine it's already been 10 years. It does feel like we've come a long way, but yet there's a lot of work left to go and do. Briefly about myself, I'm co-founder and CEO of a company called Clickatel. And it's largely our story that led to the founding of Simudisa, and I'll unpack that in a minute. Just a brief apology for Matsi Muradise, who's our Vice Chair and MD for Simudisa. She's got COVID after running around in London. So we hope that she recovers quickly and can continue her work. Briefly about Simudisa and the origin, when we started our tech high growth company, we were quite lucky in the sense that we were able to build an $11 million run rate company with $67,000 of funding. And so that growth allowed us the opportunity to go and pitch the business in Silicon Valley for a Series A financing. For most of you in the room, Series A is the first time you get real money from institutional investors into your company. And so we actually received 3 term sheets, one of them being from Sequoia Capital. And of course, we were quite flattered by that because we were the first company in the African continent to get a term sheet from, which arguably at the time was the #1 venture capital firm in Silicon Valley. But with that term sheet came a very simple ask. They wanted us to be a Delaware corporation because they were going to try and understand South African law. And their 2-page term sheet wasn't going to go and reinvent itself. And so on the back of that, it took us 18 months and $800,000 of spend with 3 law firms and 2 accounting firms to get approval from the South African Reserve Bank to become a Delaware corporation. Now, if you put that in context, $67,000 was our startup capital to get to $11 million. And in order to close a $6 million Series A round, we spent more than 10x our startup capital just on legal fees. And so that's, of course, made us realize that while we were early out the gate as a high growth tech startup, that in no way, shape or form was that reality that we faced as a South African company going to be sustainable and scalable. And we basically got a lot of entrepreneurs together, along with venture capitalists, Kiet and many other folks from 40 and elsewhere. Even folks from Silicon Valley came through for our inaugural event. But we also had government officials and educators in the room, and we said, look, how do we think about this startup ecosystem in South Africa? Because nothing happens through osmosis, right? If there's not a fertile ground, if all of you on this call and all of us on this panel don't do real work and do packet inspection, this environment doesn't just happen. You need to really care enough about entrepreneurship ecosystems to create this burgeoning sort of environment that people can succeed in. So that really, Simudisa was out of pain and out of a realization that unless we solve for foreign capital being able to be deployed into South African companies, devoid of the shackles of apartheid policies, we were not going to be able to really grow and scale our full potential. 2 more things I'll just close out in terms of this topic, which is, one of the members of my board is a gentleman by the name of Willem van Biljon. And Willem was one of the co-founders of something called EC2. And EC2 was the seed out of which Amazon Cloud Services was built and created. And so the reality is South Africa could have perhaps had the first WhatsApp with Mixit, or could have perhaps become the birth ground of AWS had we had the access to capital that other markets had at the time. So I, in my heart of hearts, believe that South African entrepreneurs, African entrepreneurs for that matter, are on par with any entrepreneur in any market. I know this because I spent 10 years in the Bay Area, and we are as resilient, as capable, if not more, than any entrepreneur I've ever met and come across, and I've met a lot of people. So if we have the same potential on the African continent, then we have to ask ourselves, why don't we have the same success? Why don't we have the multiplier and the outliers that we ultimately need in this continent to move the needle? And it can only be a real discerning packet inspection to understand, well, what's holding us back? And so the startup movement comes, quite frankly, out of an annual report that kept raising the same issues: access to capital, access to markets, red tape, complexity of starting these businesses, and quite frankly, regulatory encumbrances around Reserve Bank approvals for foreign capital ingestion, and then ultimately access to skills. So those 5 key issues is ultimately what the Startup Act movement is looking to address in a nice parcel. You have to ask yourself, why a Startup Act movement and why a Startup Act? Well, Oswald and Salma will tell you that unless you package this together and put a bow around it and really lobby and advocate for it actively, you're going to have piecemeal, and the one legislative change is going to have a negative impact on the other. So I'm very excited about the work, Sanjay, that you and the Startup Act Movement Advisory Board is doing, and all of the folks on this call really rally you to become part of this movement and part of the voice to get South Africa, and quite frankly, the African continent, into its rightful place in terms of the startup potential and ecosystem globally.
Peter, thank you very much for that. And I'm going to pick on 2 points in particular, and come back to you a bit later on that. I mean, I'm summarizing some of your words. We are solving for foreign capital to be efficiently locally deployed.
That was our initial pain point, because by that time we actually started the company already. We navigated some red tape, we got our skills and things figured out. So I think that, for us at least, that was the first crux of it. But once we did the personas for the different entrepreneurs in South Africa, we realized that it's more than just access to capital. There are many other things that need to be dealt with as well.
Perfect. Peter, thanks a lot for that. We'll come back to you just now. Salma, I'm going to bring you in. You've been significantly involved in the Tunisian Startup Act. So maybe my question for you is, maybe take us through the genesis of the Tunisian Startup Act and the bottom-up approach that you've used in basically putting this into the market. And also, please tell us who you are, for the audience, who you are, your background, and the like.
Yeah, thank you. Thank you so much. And thank you, Peter, for this great introduction. It puts us right in the core of the topic, so without getting around it. So my name is Salma Baghdadi. I used to be ecosystem director at Smart Capital, which is the operator of the Startup Act in Tunisia. So the Startup Act in Tunisia was voted and passed in 2018, and we started the implementation in April 2019. So I was there since day 0, and we started the implementation. But getting back to the genesis, it was in 2016, so it took like 2 years in a collaborative work, but also very, very hard and tough, and a lot of negotiation to get to the first, like the draft that was voted and accepted by the parliament. And the genesis, actually, it was quite different from Peter, your expectation as ecosystem, because of many things, because of the economy of the Tunisian market, like the Tunisia as a country, it has a different economy, and also we've been through a different time phase, as we had the revolution in 2010. So that was a scream for the youth to change the paradigm of economy, of social status, of everything. So the Startup Act was a kind of um, a symbol, one of the symbols of these revolutions, as engineers who are mostly youth, young people, they were asking for a new set of rules that was more adapted and that suit them in a better way. So and the assets that we saw in Tunisia that we had and we were not using them um, in a good way. Tunisia is a highly like it's a small market. It's 12 million people, average economy. So it's not a very wealthy country, but it was doing pretty well, like averagely well, before the revolution. Now it's something like it's another set of discussion. And we had one of the highest level of educated people, and with a very high level in STEM. Like we have like each year more than 9,000 engineers that were graduated. From these engineers, we had 65% women, for like 35, 40% men. So it was also very gender like representative equally. Um, we were like Tunisia is suffering still now, suffering from the brain drain. Like all the engineers, they are highly educated, very on very like innovative technologies, the newest technologies. So they were attracted by more developed markets and more better opportunities abroad. So they were leaving the country to find their ways and to find better opportunities of life as well, in France, in Germany, in the US, etc. So we had this very high level of well-connected and well-educated diaspora that we didn't get to have some of the ROI of it, like the return of investment. The Tunisian country is educating them, offering them, say, like the infrastructure to grow, but then once they have to like once they are producers of wealth, they leave the country. So that was the first assets or the first axioms to start the definition of the law. We said we have great assets and we can build a hub, a very conducive tech ecosystem that has rules actually to succeed. The rules was to give a certain level of incentives and more ease in doing business for this startup, for SMEs that are very innovative, highly scalable, but also very fragile financially, but also into market access, into business model defining definition, etc. But then also we need a much more open economy and country. So that was the two main starting point, let I say, for the genesis. And the thing that was very maybe distinguished in the Tunisian journey, and we were not used to that, it was that collaborative work. So it was a bottom up story, as for the South African also experience. So it started from the ecosystem players, from investors, from the very first startup founders or engineers, or this crazy dreamer, revolutionary young people. They were around this table, and they started the discussion. But we had an alignment in the stars, like the stars got aligned with one minister that was also enlightened, and he was very sensitive to this tech ecosystem, the startup dynamism. He believed fiercely in it, and he was very supportive of this initiative. So both aligning the private sector plus having this sponsorship and this championship from the ministry and from the minister himself was a catalyzer to make it. Maybe it was still a very hard and tough endeavor to make it happen, but with both forces, it was actually it moved forward maybe to the right place, and it was it is now a reality in Tunisia, and more than 1,000 Tunisian startups is benefiting from it. So myself, I started really working on that from the implementation phase. So I contributed to the discussion from the 100 people that were around the table, but then I was mandated as ecosystem director to implement the Startup Act. And so we started with dozens of startups in Tunisia in 2019. And I finished my mandate in 2000, by end of 2023 by 1,000 startups. So what I can say for the question, the very simple question, the basic question, does the Startup Act achieve the vision? Yes, on some level, very high level. Like we got now the startup is recognized as some of the very specific needy, but we believe in its growth and what it can actually bring to the country on economic, but also at social level. This is first, and we had also some great success stories, that testimonies that it really works, with InstaDeep acquisition and also Expensia and some other acquisition in the country. So that was a great also additions to the Startup Act. The Startup Act catalyzed the need of these entrepreneurial endeavors or new behavior of engineers or young professionals, because Tunisian mindset before that, or the culture, was not that entrepreneurial. Tunisian was more like a trade people, like traders, buy and sell, or they were like public officers. So this is our story, and some of others are agriculture, like they have the farmings, etc. But to be in that very risky kind of business, building, investing, putting so much efforts on something that we don't know if the market is willing to have or not, and bringing all these people like team investors, partners, to follow up with you or to support you on that endeavor, also is not from in our cultural in our basic culture. So it shifted now with the Startup Act. We saw it at a very like basic, like at anyone can see it, from like engineers at their graduation. When you ask them, what would you like to be, they would say, I would love to start my business or my startup, which is I consider as a main achievement for the Startup Act. But then we can get back to the challenges later. Of course, we have still a list of challenges that are not yet resolved by the Startup Act.
Thank you, Salma. And that's just truly fascinating. I mean, I like this bottom-up approach that you speak about, which is the startup founders working with the investors and engaging with government, and so everybody that conceivably is involved in the ecosystem needs to play a role in fostering more people getting into startup. And you spoke about many things, but the one thing I want to pick on is when you speak to the younger people, they say they want to start up their own business. And for me, that is true sign of success, because they're seeing something aspirational outside of formal employment, which is, can I start my own business with the skills and expertise that I have? And in part, your Startup Act has allowed you to think about that as well. Thanks, Salma. Oswald, I'm going to bring you into the conversation. We've spoken a bit about the 10 years of Simodisa. We've got a bit of background in terms of what's happened in Tunisia. So maybe from your perspective, how can policymakers and entrepreneurs, startup founders work together to create regulation that both encourages innovation and also simultaneously address the potential adverse effects of disruption? And before you go, maybe for the audience, introduce yourself as well.
Thank you for that. Hello, everybody. My name is Oswald Osari Tinkobadia. I'm the managing partner for a firm out of Lagos, Nigeria, and Abuja. called Digiday, and we are focused on policy advisory to the public sector and also digital strategy to the private sector. Previously, I worked for the government of Nigeria, and I also participated and led the process of the Nigerian Startup Act. So to get to your question, which is quite critical, because I think most of these conversations we have around government, public sector, and private sector interaction, it comes down to the C word, which is collaboration. How do we enable both parties, both sides of the ecosystem, to understand their importance and relevance in the development of the ecosystem? I think what we tend to have is, there's sort of a dysfunction where we have, I'm going to throw a few D words out here, the dysfunction where we have public sector people just sort of making rules and managing the area which they're supposed to manage. And then you have private sector people believing they don't need government and they don't need policy or regulation to develop their business and ideas. So what tends to happen, and you just use the disruption word, which is what is key from what we expect from startups to create new ideas, either efficiency or innovative in nature, that it just changes how things work, right? So that's the disruption element. But what tends to happen is the policymaker does not see disruption, he sees displacement, he sees something has changed. And the policymaker's job is to manage what exists, either to protect the users, to protect the markets, pretty much to protect. And that is quite the antithesis of the issue between the public and private sector, where you have a constant, I wouldn't use the word battle, but that's exactly what it is, where the regulation seems to be limiting or stifling innovation or innovative acts. So I think this is where the C words come in. We need to look at collaboration, we look at coordination, we need to look at conversation. There has to be conversation between both parties. There has to be collaborative activities between both parties, and then it needs to be coordination between both parties. We're in the game of value creation. We're in the game of nation building. Africa as a whole is in a development path. We are developing nations, developing states that make up the continent. And what a Startup Act does, I love the way it was described earlier, is a bow tie, right? It's a bow tie with a number of provisions that need to be pulled together to create that enabling environment. So what is an enabling environment? Enabling environment is fertile ground, which these ideas can be planted and they will grow, thrive, and remain sustainable. In the opener, we heard one of the main issues, which we constantly hear, is that all these companies become Delaware companies, which is a big problem because once they become Delaware companies, they're essentially not African companies. Africa now becomes the place that they sort of toil, right? That's where the value is being created, but the value is not really realized on the continent because the company sort of moved. So I think that the process in which we create a Startup Act in a collaborative nature, ground up, which is what we did in Nigeria as well. The story is all the same. When you have conversations with most people who have started the process of creating a Startup Act, you hear, there were problems. Government, private sector people sat together and realized what the issues were. Public sector people were brought into the room and they had a conversation, and it kind of forged a path as to how can they realize value from this fast-growing market space, which is the startup space, which is innovative, which is where we have an opportunity to push our young people, which by all the numbers that you hear, we have a whole lot of them. So what are we going to use with these bodies, right? So what are we going to do with them? We're going to educate them, we're going to equip them, and we're going to create an environment where they can create value. It's been proven once or twice that innovation in one space has become massive problem solvers in another. So it could be how you solve traffic in Joburg, maybe the cure for cancer in Norway. So the entire world is missing out on the opportunity of not having an Africa that is truly innovative. And our version of innovation, solving our local problems using digital technology, may release into the world, vastly amazing solutions for a number of other problems that exist. But how do we get there? We don't get there without the collaboration around policy. Lack of collaboration in government, always presents as a lack of coordination, and that lack of coordination is most times seen in different policy positions from different agencies within the same government, and you throw your head, what is that about? But that's just a lack of collaboration. And then the same thing happens in the private sector. We also have a lack of collaboration. And that just essentially is a value destruction. So I will stop here by just saying what's key to public sector, private sector participation is an understanding of what our roles are and ensuring that collaboration sits in the middle of that engagement to derive the right value for Africa.
Oswald, thank you very much for that. Collaboration, you've used that word a number of times, and I think that's, for me, is key, right? I mean, you spoke about the coordination and the conversation, but it is about collaboration. Salma also spoke about the collaboration between the founders, the policymakers, and the funders and the like. So Oswald, thanks for that. We'll be back with you just now. Keet, seasoned veteran in the funding space. So I'm going to somewhat and focus on one of the key things we're looking to solve, which is this aspect around funding. So Keet, maybe from your own perspective, I mean, you've been involved in this space for a number of years. Perhaps, I guess, if you could share with us the most significant changes you've observed in the funding patterns, particularly in South African startups, over the past year or two.
Yeah, thank you, Sanjay. Yeah, really fascinating listening to Salma and Oswald and Peter telling the stories. Some real frontline in the trenches, non-theoretical. So I love that. So just firstly, Knife Capital is a venture capital fund manager. So we do have a few funds under management. We've invested in many startups. We have a accelerator linked to our fund to feed us with deal flow and help some earlier stage businesses called Grindstone Accelerator. Yeah, we really have been around for a while, and venture capital, unfortunately, in Africa or South Africa is very much a matter of definition. So it depends on who you ask. Sometimes you have to hide the fact that you venture, and you have to no, that's more growth equity when you speak to the funders and all the rest of it. But when you speak to the entrepreneurs, we're too conservative. When we speak to government, you vulture capitalists, and you're not for the social good. So there's a few things to remember. So from a Knife Capital perspective, knowledge, networks, and funding. Funding is less important than the knowledge on how to build a business. If you can bootstrap it and not need funding, do that. Venture capital is definitely an enabler. It's definitely not the be all and end all. Networks is what it's all about, and I'll come back to that in the context of Medisa. But yeah, sometimes one does need funding, not because the business is drying, running into burning capital or whatever, but just to accelerate growth, to compete on a global scale. As Peter kind of alluded to, you sometimes just need some other tools to your ability. But the key thing is, if you listen to any politician, if you look at all the research, it boils down to innovation. I mean, we've already touched on the innovative entrepreneurs that this continent has. It boils down to job creation. It's what everyone tries to solve for, and economic growth. The more you innovate, especially in the knowledge economy, the more jobs you create, because there's more skills. I mean, Salma talked about skills leaving the continent, etc., etc. And at the end of the day, if you build successful businesses, they pay tax, and there's more economic growth. So I think we're all on the same side in terms of ecosystem participants, but it's the coordination and collaboration that Oswald talked about that's missing. It's all in silos. I think where Medisa and the Startup Act and those things really became relevant is, you can point fingers and talk about it for as long as you want, but sometimes, I mean, we do also have, even on this call, we have lawyers. I had a quick squiz at the participants. We have some government participants, etc., etc. And then we sit in front of government. I said, okay, Keet, what do you want? Because when I speak to this person, they say something different, and when I speak to the VCs, etc., etc. So we were we are working against each other because there's no clear consolidated message, and I think that's where the Startup Act, obviously, if I could wave a magic wand, we could steal some notes from Tunisia and we can get someone to sign it into law. But at least it creates a piece of paper that everyone can read and say, this is what we want. Just do this, and at least that will be a start towards a coordinated effort towards innovation, economic growth, and job creation. Because, I mean, you know, it's as complicated and as simple as that. In terms of what's changed, in terms of your question, it's almost, you know, we are a long way from it. But I mean, I think your first question was a little bit about international capital. You probably picked it a bit there. Definitely, there's more. The continent of Africa has sort of woken up some international funding giants. So there's definitely more international capital coming in, which is great because it gives money, obviously, and confidence and networks. But to be quite honest, this continent does have enough money. You know, if you think about a country like South Africa, there's pension funds. Not one pension fund is really significantly invested in any VC fund. We don't have one pension fund on our cap table. I mean, the SASME fund had to catalyze through guerrilla tactics via Ketso and sort of how to analyze a fund of funds, et cetera. That's part of our problem when we speak to the DFIs as a South African fund manager. They say, no, but hang on, you guys have got all these pots of money. You've got a developed stock exchange. You've got all these successful companies. Surely you don't need our money. We're like, no, trust me, we need your money. So we do have a little bit of a dead zone in terms of capital allocators coming in here. But to be quite honest, they see the VC ecosystem as R&D, as a POC. So like, look, once you guys are successful as an asset class, then money will clearly follow that asset class. I mean, we want to make money here. So I think that's, you know, also don't want your pension money to be funding POCs, you know. So I think at the end of the day, we all can play our part. But what has changed is more international funding. Some of the local funders are coming into the play, Regulation 28, etc. And I want to get too technical. The angel ecosystems, I mean, you know, from where you sit in the Josie Angels, etc., there's definitely, I mean, you know, a lot of capital that has propped up the Visa ecosystem over the last many ever years. It's basically been an angel ecosystem over here. But then what has happened is, as the funds have become, let's say, successful in getting capital, they move up the size chain, you know, because you don't want to then make too many small bets. You start making bigger bets, like as a knife capital, which basically leave seed capital open. So while we have been more successful in closing the challenge on Series A and further, seed we have left, you know, wide open. So I think I feel really sorry for the seed entrepreneurs because we still don't have a significant answer for that.
Yeah, thanks for that. I mean, seed and pre-seed is certainly a funding gap that continues to lag, unfortunately. And Peter, you spoke a bit about this, you know, outside of the capital. I mean, there's a skills component, there's access to market component. Salma's spoken about a few things, which is setting the set of rules that the ecosystem sort of broadly abides by, right? And at the moment, unfortunately, in South Africa, that common set of rules doesn't quite exist. I'm conscious of time, so I'm going to put all the panelists on time for the second round of questions. I'm going to give you 3 to 4 minutes. Salma, I'm going to start off with you. And you spoke about lots of things that happen in the Tunisian ecosystem. Perhaps if I can ask you to focus on the top 2 or 3 things that, in your view, have been notable successes. I know you've spoken a bit about that already, but in your view, what are those top 2 or 3 things that you now, sitting here looking back in the last 6-8 years, that you sit back and say, those were the key successes that, having started in 2016 and now we are in 2024 with that coming out in 2018, I'm sitting here looking back very proudly and saying those are the top 2 or 3 things.
Thank you for this question. It's a very good one, but also very tricky to answer to. So just for to have an overview of the law of the legal framework in Tunisia, it was 3 sets of incentives. The first set was dedicated to the founders. So here, one of the major incentive was a stipend or a kind of salary giving to the entrepreneurs that are for companies that are aged less than 1 year old. So that was a catalyzer a kind of a support, like I take your hand to make this big leap into this risky entrepreneurial world. So it was very successful as an incentive. The second set of incentives was addressed to the company itself. So the moral company, the startup itself. And here, the most successful, in my opinion, and based on my observations of what happened, was the incentive that allows the startups and Tunisian startups to manage foreign currency with more freedom than any average SME company in Tunisia. You need to know that in Tunisia, it is like a very closed economy where foreign currency is really regulated, and no one, even individuals, we cannot hold actually and have foreign currency while in the Tunisian, while we are under the frontiers of the Tunisian country. Each thing needs to have the approval of the central bank at a specific amount of a ceiling. Like we cannot have more level of amount, which is very, very small. So that was giving a freedom for startup founders and CEOs to manage their money, their foreign dollars and euros, the way they wish to, or the way they want to work with international experts, to buy some specific hardware, sensors, this kind of stuff. So that was that like brought big ease comparatively and relatively to other SMEs in the country for the founders. So that was a very successful incentive, very contextualized to Tunisian challenges and Tunisian economy. It may sound like stupid or make no sense in other countries, but in our context, it was like a huge kind of game changer in doing business. The third set was addressed to the investors, giving them tax incentives and also easiness in investing into startups, in local startups. So that was also a call for any local investors and business angels to look at this investment the startups as investment opportunities that provide a lot of saving for their like paying taxes at the end of the year. So this my first answer to what worked well in terms of the incentives, what was really a game changer in building this ecosystem. But then for me, the legal framework was not enough and not sufficient. And this is also every time my claim now that I left my position as ecosystem as director of ecosystem in Tunisia, and now I'm advisor in ecosystem startup ecosystem building in emerging market. I always try to highlight the fact that legal framework, there are amazing tools, there are catalyzers of ecosystem development and fostering and having better and more conducive environment, but they are not, unfortunately, they're not enough and they're not sufficient. So it has to be supported and followed and lifted by other programs, such as building the ecosystem, connecting the players, structuring the ecosystem, giving access to markets and giving access to fund opportunities, promotion, exposing also the ecosystem to international opportunities, being like exposed, or we can see on a map, on the map of tech ecosystem around the world, because no one knows about Tunisia, no one knows, maybe South Africa, everyone knows about South Africa, you have more exposure, Nigeria as well, but for us, like smaller or medium kind of markets, it was difficult or tough to make a space on that, or having a chair on this round table of tech ecosystems around the world. So it was a big challenge to overcome, and it required a lot of work and connection and collaboration from private and public stakeholder. And I think at a certain level, we achieved on building a structured and well-connected ecosystem. And we also, I think, at also very relative level, like comparatively to other maybe um, early stage ecosystem, because I consider Tunisian ecosystem, it's still at the early stage, at the verge of going more mature. But we have also a very a strategy built on data-driven, like a data-driven strategy of building the ecosystem. And that was allowed by the Startup Act, by the way. So also one of the major outcomes of the Startup Act is shifting the mindset, the culture, but also giving right, like data insights built on data from that we collect from the Startup Act itself, as we received thousands and thousands of applications.
Salma, thanks for that. I mean, like your view on the incentives at those varying levels, I think it's certain. I mean, we've had some type of incentives years gone by, and I guess that's part of the conversation. Oswald, I'm gonna bring you in for a quick 2 minutes. In your view, what policies and incentives, based on your experience in Nigeria, could we introduce to foster innovation and growth, not only in South Africa, but also on the African continent?
So yeah, so that's a question of how do we look at Africa as a one market? We're looking at the FCTA and some of the things they're trying to do around the digital policy. But the problems are quite obvious, right? So if it's just the idea of the one that Salma and I spent some time on talking about in 2022 and 2023 was just the immigration, right? So what are each of the countries thinking about when it comes to immigration policies, right? So startup immigration. If you're a startup in Kenya and you need to bring somebody in from Nigeria, what's that process? If you're a startup in South Africa and you want a programmer from Nigeria, how do you go about that? And vice versa. So these are some of the things that kind of drives the conversation around a Pan-African startup act, right? So this conversation has happened in a number of different conferences where African leaders have gotten together, ministers of tech have gotten together and discussed it, leading from Algeria at the ASC, or the one that recently happened in Sierra Leone, where these conversations are happening. And I've seen Salma in a number of countries in West Africa where she's having the same conversation around startup policy development. And there are a number of other players who are doing these same conversations, which we're also doing today in South Africa, albeit virtually. So the same policies that are required within the country to spur growth is also required across border to help us be able to drive our startups across the continent, because we do have a market of 1.4 billion people, and the issues are the same: digital literacy, digital inclusion. What are the policies we're putting in place to ensure we can actually grow the market, right? Because we sort of have a fake TAM issue that we don't talk about. Is it 1.4 billion really? For which application, which startup is really going to really sell to 1.4 billion, or is it really 100 million across the entire continent when you start thinking about digital literacy and digital inclusion? Do they have the right devices in their hands to be able to access these startup applications, or can they even read, right? So we keep repeating this over and over again, but these policies that drive digital literacy, the idea of how do we step over some of these problems, how do we create policies that don't go step by step, right? So the problem is that you can't read. Is it that we develop schools, or do we create tech solutions and tech policies that address delivering the actual solution to the people? So when you think of government services, right? Do we deliver it to them? And the only way they can get it is do they read? So we have to look at our policies across the continent to say, what are the problems we're trying to solve, and how are these problems similar across borders, and how can we solve them together? Around taxations, around logistics, around getting things from different countries, even flying from different countries. Just try flying across the continent is a problem. So these questions are always difficult to answer, because it's almost like the answer is everything. Everything is the problem. but that's not helpful. And I think that's why I love that statement. I go back to it, a bow tie. What happens with developing a Startup Act or any other policy, from the legislature perspective, is that it gives us opportunity for all the stakeholders to put it on paper. So Startup Act is just one. SME is another one, SME Act. And we need to look at this from a country to country perspective and from a continent wide perspective on how we expand the market to be able to have a flow of goods and services digitally and otherwise across the country, just creating value. So I think it's hard to pinpoint one because that's just going to be rattling a number of things. I think the problem is really how do we create these policies across the continent to ensure we're able to deliver value across the continent.
Oswald, thanks for that. I mean, my biggest key takeaway from what you've just said, Pan-African. So it's a country problem, but it's a Pan-African problem as well. And how do we collectively solve that? Kit, you've been involved in entrepreneur support work over many, many years. I mean, I guess from your perspective, have incubators, accelerators, entrepreneur support organizations been effective, particularly in supporting startups? And given your involvement in the space, what do you think are some of those things that need to change?
I think the short answer, probably unfortunately, is no. It hasn't been hugely successful for startups, so I think there's been other beneficiaries, but if you really take the average startup and you say, do you feel supported? Do you know what to do next, in your journey? And are the programs tailor-made for your stage? So look, it is difficult, but there are 80-20 rule. I mean, there are the learnings are the same. The pitch deck formats are the same. Financial modeling, getting your head around sensible valuations, standardized term sheets, safe agreements. Like I think there's a lot that can be done to a point, and then it needs to be tailor-made. I think there's of late a lot more focus on, let's call it, with respect, back office support. I think this let's call it the scaffolding that any business needs to have in place, financial accounts, etc., which sounds like the boring things, but those are the things that investors look at in a data room. So I think a lot of these things go hand in hand. What needs to be done is I think there needs to be just, there's a few different models that need to be pursued at the same time. There should be a one-to-many model, meaning like a lot of these things can actually be digitized, automated, and the learnings are the same. But then as the companies become more, let's call it, sophisticated on their fundraising journey or their growth journey, it doesn't all have to be about fundraising. Just catalyze good companies and help them to actually not raise funding. I suppose we can put that that as a goal, then just help them to be more sustainable, more desirable, and then they will by default be more interesting to funders. So, I mean, I'm saying a lot, but also just trying to summarize to say it has not worked at scale for the actual beneficiary, which is the startup, and which is a high growth business with ambitions to have a repeatable and scalable business model. And let's not forget that is the target market. And if we fix for that particular client, then we will we'll fix for the rest. So I think so far it's just been maybe a glorified consulting business with people sort of trying to help, but not really thinking about the depth of the problem.
Practical on the ground impact. That's what moves the startup forward.
Yeah,
Peter, we're going to close off.
It's difficult, but not,
No, it is. Yeah. Peter, I'm going to close with you, and I've got two questions. One that I'm going to really put you on the spot, but let me go with the easy one first. I mean, I guess as an organization, Simudisa has been around for 10 years. In your mind, what does the next 10 years hold for you? What are you looking to achieve through this organization?
Well, I think firstly, I hope it doesn't take 10 years to get the Startup Act passed. I mean, the reality is that we need to establish trust between policymakers and the ecosystem. Entrepreneurs are uniquely resilient and equipped to navigate whatever is thrown at it, even if it's bad policy. The problem is we are exporting our founders and our companies instead of our products. And so it's time for policymakers to really sit down and open up and be vulnerable in a conversation with us to understand what we are ultimately seeking. We're not looking to siphon away capital or IP from South Africa. We're looking to have the next Square, Amazon built and created in South Africa. The reality is that you can build a consumer business quite comfortably in the African continent because of the diaspora and because of the large access to market. You certainly cannot build a B2B company successfully in this continent, given where the maturity of these markets are. So I think it's a time for a real conversation and to really look at the scars and the pain we all suffered to get to this point. So hopefully not, we always say that Simbadisa Exco, every year at our offsite in strategic planning, we're saying that if the ecosystem worked, Simbadisa should not have to exist. Policy is not sexy. It is, even this webinar, the fact that you guys stayed on to this webinar is quite astounding because policy work is quite boring, but it's so essential. And so hopefully we can get some traction on the Startup Act and get it passed in short order, especially with the new Government of National Unity.
So here's my big bonus question for you, Peter. I'm going to arrange a meeting with you with National Treasury and the Minister of Small Business Development. What is your single ask of them?
It's quite simple. You had me move to Silicon Valley for 10 years. I almost stayed there. There was no reason for me to come back. I came back to get the Startup Act passed and then some other personal reasons as well. So let us really explain to you and show you how this can change the economic outlook for a new generation of entrepreneurs in the country.
That's our challenge to government. Folks, we've come almost to the end of the hour. Before I thank our panelists, Bongi, maybe if I can ask you to put up the QR code which people can scan to download a copy of the 23-24 report.
No problem, Sanjay. We'll put it up right now.
Perfect. As Bongi is doing that, Salma, Oswald, Kiet, and Peter, thank you very, very much for your unique and very useful insights. Peter, challenge is for all of us to engage with government to get the Startup Act into legislation sooner rather than later. I take your point, it can't take us another 10 years because truthfully, we may not have a startup ecosystem left in the country in another 10 years unless we have some legislation, some incentives, some support. And Oswald, I'm going to steal your word of the day, collaboration. Folks, you've got the QR code on screen. Please scan that. You'll be able to download a copy of the report. To the esteemed panelists, thank you again for your very valuable and useful insights. For everybody in attendance, thanks for sharing the past 1 hour with us. Hope you will find the report packed with some useful reading and some key takeaways. That's it from my side. Wishing you a fabulous, rest of the afternoon, and thanks everybody for making time to be with us.
Yeah.
Take care now.
Thank you.
Cheers. Bye-bye.
Cheers, everyone. Bye.